Before any cost reduction project gets underway, the first question should be, should we invest in this at all? Reducing cost takes effort. Labor hours are required to develop and review changes. Equipment and labor hours are required to validate changes. It's not just simply a technical exercise, but rather a financial commitment. And that means the business needs a clear expectation of the return prior to starting a project. That's where a cost reduction target comes into play. It's not just a planning tool, it's a basis for justifying the development effort up front. The difficulty, however, is that the target has to be defined early, before the team has fully explored cost reduction opportunities and has confidence in what is achievable. The intent is to build a well-balanced estimate, one that pushes the engineering team beyond incremental improvements while still aligning with business objectives and supporting the investment decision. That estimate needs to be built from multiple perspectives. You need to understand where you are compared to your competitors, combine that with your understanding of the engineering capability, and determine what is achievable. Next, you'll need to factor in cost reduction ideas already identified and align that with the margins that your business would like to achieve. Individually, none of this gives you the full answer, but together they allow you to define a target that is grounded and credible. In this video, I'll show you how to bring those elements together, how to define a cost reduction target that justifies the effort and challenges your team. Now, before we get into the how, it's worth addressing a natural question. How aggressive should that target really be? In my experience, the targets that actually drive meaningful results don't always feel comfortable at the beginning. I've been part of cost reduction efforts on large complex systems where we set targets of 20% or more right out of the gate, targets that at first glance appeared to be unrealistic. There wasn't a clear path to get there, there wasn't a single idea that would close the gap, but as the team started digging in, something interesting happened. The savings didn't come from one breakthrough, they came from multiple areas, often places that weren't even the radar at the start. In many cases, the biggest opportunities were concentrated in one particular subsystem that no one initially expected. When those savings were combined with improvements across the rest of the product, the total reduction didn't just meet the target, it exceeded it. A well-constructed target doesn't require you to know exactly how you're going to achieve it on day one. Instead, it creates the conditions for the team to find a way. Which brings us to the first question. Why set cost targets? One of the primary reasons for setting cost targets is to define business cases. This allows costs to be defined, including both product cost savings and project cost, allows you to define the allocation of project resources for both personnel and other expenditures. When that is combined with the revenue estimates, you can determine what the ROI is, and the ROI is a path to evaluate a business case. Cost targets are in essence the primary anchor of a business case for cost reduction projects. They translate technical effort into financial impact. Using business cases to approve projects removes ambiguity from the approval process, reduces open-ended discussions, provides defined planned outcomes, and also allows the leadership to make decisions during the approval process. They can look at whether targets can be adjusted to better match their strategy. They can trade off risk, timing, and reward. And they may have 7 to 8 different business cases. They most likely have limited resources to fund certain projects, and they may only move ahead with 2 or 3 of those rather than all 7 or 8. And they have to evaluate whether they want to have a lower risk with a medium reward, or they want the higher reward with a higher risk projects, and they're going to look at all of those projects and weigh that up and determine which ones to move forward with. Once they have selected a project, that unlocks the personnel and the funding for the other resources needed to execute that project. Another primary reason for setting cost targets is to drive team behavior. It eliminates vague goals from projects that don't have a business case to drive it and cost targets to drive that project. It aligns functions including engineering, procurement, operations, and sales together where they have a common objective to meet. This can be used as a core trade-off mechanism in terms of the performance requirements and other requirements, and it motivates the teams to explore and dig for new opportunities, question underlying assumptions, examine the full system, and it leverages the creativity of the team. This is not to be underestimated. Teams work better under a restricted environment where they have to meet a certain objective and dig deeper. They're going to look at everything they have. They might brainstorm. They may look and have discussions, look at the actual product, turn it over, look at which areas they've missed, they haven't looked at. And this provides for new ideas. As those ideas are discussed, they become more robust as they blend it with other ideas from other team members. And this drives positive behavior and allows you to better meet your cost reduction targets. Next, we're going to cover how to set targets. Setting targets is not an exact science. It's not purely data-driven, but rather a mix of estimates with some reasoning and some experience. A good place to start with is to understand what your minimum acceptable margin is for your business and use that to determine what your base cost target is going to be. Once you have that base cost target, then you can look at other aspects. And one aspect is, what should that product cost? You can look at the product you have, use a weight-based estimate, and then determine where that cost should be. There are other ways of using high-level models to determine what that cost should be. Compare it to similar products that you have in your portfolio. Where are they? Look at it from a weight-based perspective, see whether you're achieving a better cost with other products. Then look at that as well in terms of trying to get that cost target a little higher. Once you have a more refined cost target, you're going to be looking at what you already have identified. If you have identified a certain number of cost savings, you want to compare that to your cost target. If the cost target is significantly higher than what you've already identified, that's good, because there's some tension in what the team still needs to achieve. You haven't already achieved the cost target, and thus it is something that's going to create some tension for the development team, but that's what you want to do. If that cost target is very close to or is lower than what you've already identified, then that cost target is no longer acceptable, and you really need to increase that cost target to get to a point where you are challenging the team. And this is an important part of the cost target verification process. Next, check with engineering. Can these proposed targets be realistically achieved? What experience do they have in achieving cost reduction targets? Understand where the areas of uncertainty are. Where are you going to find under versus overachievement? And then understand how much does that impact what you set that cost target at, and then make an adjustment based on those discussions with the engineering leadership team. Also incorporate your experience with cost reduction efforts. Look at your historical data, speak to people who have performed cost reduction efforts, and look at what they've done and how they've approached this in the past and what the results were. Once you understand those results, use that to adjust the cost targets that you have and come up with something that is then ready for a risk assessment. A risk assessment is an analysis that determines whether the cost target is going to give you a realistic cost reduction. You want to understand whether it's probable that you're going to make cost savings overall, because there's a cost to the actual project. And if you aren't going to be able to justify the investment to reduce the cost, then it's no longer a viable cost reduction effort. One method would be to determine what the lowest cost target would be to still justify the investment. If that cost target is very close to the cost target you're coming up with, then more than likely the probability of being successful is not very high, and you may have to drop the project. If the difference is significantly higher than the lowest cost target, at that point you have a better chance of justifying the investment and a lower probability of not meeting the cost reduction targets that you've set out to achieve. You can quantify this risk in many different ways, and this is not the only method to use, but what you need to do is you need to quantify that risk in some manner and just be assured that you believe that there's a reasonably high likelihood that you're going to achieve the cost reduction that's going to justify your investment. Once you have this developed, you don't want to be publishing the nominal cost target that you've come up with to the team. You want to increase that target by 25 to 50%. This provides a challenge to the team, and that may surprise you as to what they can achieve. You want to decrease the risk of underperforming, which is why you increase that target. Once you have an idea of how you're going to approach this, review your structure and approach with the leadership team, see whether this aligns with their strategy, whether this meets their objectives, and determine whether anything is being overlooked. Once you've defined the top level cost reduction target for a system, you may need to define sub-targets as well. This is the case for larger systems where you have multiple teams responsible for different parts of the cost reduction effort. In order to keep each of these teams separate and provide for some autonomy for each one of these teams, it's necessary to define a sub-cost target for that team and the scope that they're responsible for. It may be that this team is responsible for one subsystem, they could be responsible for 3 subsystems or half a subsystem. But in essence, you want to limit that one per team, and this provides for a less complicated interface with the other teams. They still need an interface on a system by system basis because the systems do interact and there will be some discussion that needs to be had. But in terms of the cost per system, each one of them has their own cost reduction target. This provides for greater clarity between teams. It also means that each team knows what the contribution is and eliminates confusion. When it comes to having more cost reduction targets, it starts having diminishing returns as you start adding more and more cost reduction targets. It's best to keep it down to just one per team in the top level. If you add more targets, the additional administrative burden doesn't really provide much greater benefit and just slows the effort down. At some point, it's not really worthwhile anymore. So my recommendation is to keep it at a minimum, but give every single team its own cost reduction target, and that way they can be somewhat autonomous. When you allocate the cost targets between the different teams, you want to look at which subsystems they're responsible for. The subsystems that have higher opportunity should be allocated more of the cost reduction budget, and those with low opportunity should be allocated less of the cost reduction budget. This is a perception in the beginning. This may change as the actual effort progresses and may need to be reallocated at some point in time. And very often is reallocated once or twice during the course of a project. But this is done in a very coordinated fashion. You have the leadership of the project and the team leaders coming together, having some negotiation as to what those new targets are, and then once they've come to agreement, republishing the targets back out to the team. Managing cost targets is an active exercise. You can't leave it to chance. In order to manage costs, you've got to track it on a daily basis. You've got to measure what your estimated cost is on a regular basis and compare it to the target. It's your core tool for oversight and control of the project, and you're going to keep this visible and accessible to the whole team. This is the basis for your decisions and prioritization. It removes ambiguity, and it also helps you drive transparency to your management team so they have visibility at all times. It helps keep the team aligned. If you give them this tool, it empowers the team. It reinforces their ownership of the results, makes them understand where they are, helps you create a bottoms-up type approach rather than a top-down approach. Once they see what's needed, they'll start making decisions without input every day. This means you can catch shortfalls early, identify when targets are slipping, act when gaps become unmanageable. You want to be able to adjust quickly, redirect effort based on the data, and then maintain that momentum towards the target. While focusing on meeting the requirements and trading off against the target, you want to avoid false savings that do not meet the requirements. When you have these situations, you're going to need to backtrack and redo those efforts and find out why you're not meeting the targets, or you're going to drop those initiatives that are not meeting the requirements. This is an iterative process. While you're progressing, you've got to validate, you've got to adjust, you've got to repeat. You've got to expect multiple cycles before reaching the final result. This is not a one and done type exercise. Everyone needs to stay focused, and once everyone stays focused, the chances of meeting the objectives is so much greater. To recap, cost targets allow you to anchor a business case and create a clear basis for approval and resource allocation. They remove ambiguity and force real decisions around risk, timing, and return. They also shape how your team works. They align engineering, procurement, operations, and sales all around a shared objective. They push teams to question assumptions, examine the full system, and find opportunities that are easy to miss. The process is not exact. You're working with estimates, experience, and judgment. Starting with margins, build the target using inputs from multiple functions, validate it and refine it with iterations. Then break the targets down to align with how your teams are structured. Most important, manage targets actively, track progress daily, keep performance visible, stay focused on meeting requirements while driving toward the target. If you do that consistently, you improve your odds of hitting the objective. I'm Heinrich Bartels with productcost.com. Our focus is in helping you identify cost reduction opportunities and build that capability over time through practical insights, tools, and guidance you can apply directly in your day-to-day work. This is meant to be a two-way conversation. If there are topics you want us to cover, share them in the comments section below. And if you're working on improving your product business cases, take a look at our free guide, Develop Compelling Business Cases, 7 Steps to Transform Your Product Strategy at productcost.com/business case guide. In short, even with limited data, cost targets allow you to build credible business cases, guide team behavior, and actively manage execution toward measurable results.